Are you tired of getting dumped on like this and this in the Bitcoin market? What if I told you that there's a way in order to sell before having this massive dumpage to the downside like you see right there? Around, look at that from I'm just gonna put it from here to here, 36%. Here, 26%. What if I told you there's a way to avoid you guys getting dumped on using a way I'm going to teach you in this video? So stay tuned, watch this full video to know exactly when to most likely get out of the market before this massive dumpages happen in a Bitcoin price and in the cryptocurrency market. So stay tuned in today's Bitcoin YouTube video to find out how can we determine when to sell and when to buy with a consistency of a high probability of making money in this market. So yeah guys. Hi guys, and welcome to Crypto Solutions, here to help you make the best decisions in cryptocurrency and in cryptocurrency technical analysis. In today's Bitcoin technical analysis YouTube video, we are going to be talking about how can you avoid getting dumped on in the Bitcoin price almost every single time using the techniques I'm going to teach you in today's video. So first of all, how do you avoid getting dumped on like this you see right here? Well, first there's something called technical analysis. So almost every single time when a Bitcoin move occurs to the downside or to the upside or both, almost every single time there's almost always a pattern that the Bitcoin price forms before heading to that direction, with almost guarantee almost all of the times. Like not 100% guarantee all the time, because there are black swan events which there's no pattern that can trade at. The only way you can avoid that black swan event if you know who is planning black swan events. But you know guys, so I'm gonna teach you how consistent this strategy works because it will save you a lot of money using this technique. So first of all, okay, so right now, how can you determine that the Bitcoin price is going to do this and then this and then this? So first, here I can see a pattern right now. You see this boom, 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 that's a dollar top. Dollar tops are negative patterns. So the way dollar tops work is like this: boom and boom. So it's gonna look like an M pattern and then continue to the downside. So it's like a McDonald's. But here you can see that I'm going to drop the neckline right here, so you can see right here to here. So the way this dollar top works is you measure from the neckline like this, from the neckline to the top of the last wick around this area right here, and then you put that trend line on here. And look at that. When you look at the end, this will be the price target. And you can see right here, price target was met over here. It took some time, but eventually it reached the price target. That is a percentage gain if you trade that using a short position of around 27%. Okay, that's a very good gain if you trade that. And if you don't trade, you can sell there, boom, and you avoided 26% pullback. So right now, how can we determine now when the Bitcoin price is going to do this? So easy, very easy. Here we can see a W pattern. Like the thing you saw right here, this double top, is the same thing but backwards, an inverse version of it. So here you can see a W, not an M, a W like this. So it will be almost the same thing, almost, just the difference is it will be inversed. So it will be here and here. There you go. Like that would be the neckline, okay? And what is the price target for this? From this wig to this neckline here, put it around here, and you can see right there, boom, it met the target right there. Around 1, 2, 3, 4, 5, 6, 7, 8 days to complete, and that's a percentage gain of around 15%. Boom, another good way to determine what is the Bitcoin price going to do. And you can see that exactly when this double top pattern was met, it formed another pattern right here, W pattern, and boom, went to the upside. And you can see right here, how can you anticipate that it's going to continue going higher? Well, this pattern is named I'm gonna draw it real quick. In smaller time frames, you will see the pattern, but using the daily time frame, I will put this here because patterns can also be traded using the 4-hour time frame. And here, this will be a pattern right here, there. And this will be considered a bull flag, a asymmetrical bullish triangle. So it will be like this. It will be measured from the previous bullish wick around here, from here to here, and then you will put the target right there. And look at that, boom, beautiful. The target was completed there. You see that? That's how you measure the target, like this. And boom, exactly met the target, and then went to the other side because it has to have a break. You can see right there, that was a percentage gain. If you trade it from here to here, that's a 21% gain right there. Beautiful. And then, boom, downtrend. So right here, this downtrend is caused because, one, in this period of the Bitcoin's chart, the Bitcoin price was in a bearish trend. So when the Bitcoin price is in a bearish trend, you will most likely expect for the Bitcoin price to keep going lower. And right here, we can see that the Bitcoin price is forming this downtrend. So it will be like this. It will be, you put resistance from here to here, like there, and another trend line from here to here. Sometimes, guys, you have to wait for the patterns to form. It can take some time sometimes, but most of the times it's pretty fast when patterns form. And yes, patterns form in the daily time frame, in the 1-hour time frame, in the 4-hour time frame. But usually I use the daily time frame because most of the times it will not do a fake out. Fake outs are when a breakout, for example, right here, this is a fake out. So this is a falling wedge, which is a bullish pattern. So usually in falling wedges, you see that after it breaks out, it confirms, and then the price target will be met around here, most likely to the top of the wedge. But since this is a bearish trend, you will most likely see fake outs in bullish patterns. Or if almost any pattern breaks out, it will most likely, in a bullish manner, it will almost always do a fake out. Fake outs are when it breaks out of resistance, confirms support, but it can't hold support and then gets back on the pattern. That's a fake out. So right here, guys, here is a pattern right here forming. So you see that this this funny wedge was a fake out, because patterns will not always complete, because it's not a guarantee, but it will most likely complete if you follow the trend. If it breaks bullish, expect for this price target. If it breaks bearish, then expect for the other price target to the other side. So right now, guys, I'm gonna delete this funny wedge because it got invalidated. Why? Because went lower than the support and also touched the support line around here. So I'm gonna delete that line there and there. So right here, how can we predict that with a high certainty that the Bitcoin price is gonna do this? Because there's a pattern right here. This is an inverse head and shoulder. So in the inverse head and shoulders, what you typically see is this is shoulder, head, and shoulder. And then you put the neckline around here. It will be there because you can see here, resistance there, resistance and resistance, and there. So the way you estimate the price target for an inverse head and shoulder is measure out the price target from the head to the neckline like this right now, and from here to here and there, and boom, beautiful. And that would be the target, and you can see right there the target was met around here. And yes, guys, sometimes the target can even go even higher, or sometimes the price target can reach a short side of it. That can happen, but will most likely lead the way to the lead the way to the next move for the Bitcoin price. So right here, this is another pattern here. This is a bullish triangle, bullish asymmetrical triangle, which has a very bullish target. I'm gonna show you how it's measured really quick here and here. And then you measure out from here, from the to here. And this is how the target is measured, and you can see, boom, this will be the targets. But remember, guys, bullish breakouts, remember, most of the times in bearish trends are not gonna be met. It will be short-handed, or it will have a fake out. So that's why in bear trends you will most likely want to trade bearish patterns, or bearish breakouts also, because that's how the market goes. The trend is referred until the end, until the trend changes, and then boom, you can see right here it increased, almost met the target right here. Like I mentioned, this can happen. It can be really close, and then boom, then head to the other side. So that's a move from the inverse head and shoulders. First, that price target got met. That's around a 15%, 14% right there. And here, the other pattern right here, that's a percentage gain of around 70%. But if you take out the profits right here, it will be around 14%, 15% there. And then after bullish breakouts and after a pattern usually completes, you will see a movement to the other side, unless you see this boom and then forming another bullish pattern and then breaking in the bullish manner, then boom, continue to the upside here, and then downtrend. This is a break from this. So here, what I can see right here, this is consolidation, right? This was kind of maybe a W pattern, but it's a really ugly one maybe. But right now, yeah, sometimes the Bitcoin price can just consolidate and do this. Like, not even patterns can determine what's happening in the Bitcoin price during those moments. That is called consolidation, when the Bitcoin price is not going up or down that much. It's not Consolidation is when the Bitcoin price is not going down too much, or when the Bitcoin price is not going up too much, or both. It's staying within almost the same price ranges. So right now in the Bitcoin price here, when that sometimes that can happen, and when that happens, and you will have to wait until a pattern shows up. Remember, guys, even if there's not a pattern, wait for it, okay? Because usually when there's no pattern, usually there's consolidation. So why did the Bitcoin price did this to the downside after just doing this, and then out of nowhere, boom? How did that happen? So the reason why that happened was because of this pattern I'm gonna show you real quick. So the Bitcoin price was forming this descending triangle from here. I'm gonna show you from here, and wait a sec. I'm gonna show you just this. The percentage gains there is on the way, kind of. So like this, like I show you guys here, that's the resistance. Why is this the line how it should be drawn? Because of the touch lines. If boom, touch line, here was a touch line, here was a touch line, found resistance, and resistance, boom, resistance there a lot of times. The other support line would be measured like this, from here to here. Why? Because you can see right there that the Bitcoin price is respecting here this support there, and boom, breakout, and then resistance and continuation. So the price target for this giant descending triangle is measured like this. This is a descending triangle, bearish pattern. This will be the price target. Okay, this will be the price target for this descending triangle. But as you can see right there, even with the bearish trend, this price target wasn't met right there. But this was correct. This was correct because it was following this pattern. You can see right here. I'll show you real quick. Support, resistance, support, resistance. It broke out in a bullish way, but because of the downtrend, this can happen. Fake out to the downside. Okay, that's why in bearish trends, it will be most favorable to trade on bearish breakouts, because bullish breakouts in bearish trends will most likely result in a fake out, which will be a higher risk for trading, because you will increase your probability of losing the trade. And in bullish trends, you don't want to trade bearish trends. Why? In bullish trends, it is more favorable to trade bullish breakouts because it will most likely complete. If you trade on bullish trends, bearish breakouts, you will have most of the times a fake out like you're seeing right here, but to the other side. This is a bearish trend. And how can you know that there's a bearish trend? Because in the higher time frames, in the daily, see lower highs, lower lows, kind of right here. That's how you know there's a bearish trend. And in middle of the bearish trend or in the bullish trend, you can trade like these patterns: 1, 2, 3, 4, 5 right here, because I'm explaining this one. So those are very good gains. Okay, those are very good gains, guys. You see right here, in this amount of time, 26% right there, 14%, 21%, 14%, 14%, and that's how you can trade consistently and be profiting very good. Here, this price target wasn't met because of the fundamentals of the Bitcoin price. This was the bottom. Okay, so this can happen, that like I said before, this price target wasn't met. Okay, but at the meantime, right now, how can you anticipate this movement to the upside like this? Well, here you can draw the resistance from here. I'm gonna show you from here to here. There, that's one resistance, and support there, and that will be the support line. And the Bitcoin price here is following this resistance, support, resistance, resistance, support, breakout. It did almost a fake out, but the Bitcoin price managed to stay above this resistance, above this support line around here, this line. Still support, and then boom to the upside. How can you determine the amount of price target? From here to here, from the support to this resistance, it will be like this, and there, and boom, and you can see there, price target was met right there, and boom, beautiful. That's a percentage gain of around 32%. Okay, very big. If you're using leverage, oh my gosh. But remember, with caution. Here, how can you anticipate that the Bitcoin price is going to do this? Because the Bitcoin price was forming this rising wedge right here. There, rising wedges are bearish patterns, but here you can see the Bitcoin price was forming this pattern right here, ascending wedge right here, and it can also be considered a bull flag, because when the Bitcoin price does this pattern right like this in a consistent manner, that can be considered as a bull flag. So the bull flag will be measured from here to here, and then boom, will be measured like this, and here the price target was met right here. Beautiful. And that percentage gain was around 27%. Like, wow, 32% here, 27% there. Wow, beautiful. So you see that even if the price target is here, you can see that the Bitcoin price just kept going higher and higher. And yes, sometimes that can happen. Most of the times it doesn't, but sometimes that can happen, that you have a price target and you have the pattern drawn correctly, like this. This is drawn correctly, and the price target is around here. But sometimes it can happen that it keeps going higher. Okay, that can happen. Okay, and that can also be attributed to lower time frame patterns. But like I said, I like to trade big time frame patterns because it is less likely to do a fake out, and it will most likely complete because it's a big time frame pattern. And right here, guys, so you can see this pattern right here forming. So why did the Bitcoin price dump like this? Because you see, this was the price target, and then it got even more parabolic right here, and then you see this pullback. That's because when you see a lot of bullish movement, you will have to expect a bearish move to cool down that price, because it's just going too vertical. Most of the times you can expect this type of movement when the Bitcoin price first breaks out of a bullish in a bullish way, completes the target, and then forms a bull flag, and then completes that also. After those two things, you can most likely expect a pullback. And yes, it can even overextend, but that will be very close in any a moment now to just have that pullback after completing this bullish pattern right here and this bullish breakout out of the bull flag right there. And after that, boom, that was severe. That was from here to here to, wow, 26% in 2 days of a pull. That's a 26% pullback in 2 days, okay? So right here, then the Bitcoin price is forming this pattern right here. Right now, the Bitcoin price is in a bullish momentum. Why? Because their lower highs, that's called lower highs, okay? Higher highs is this boom, boom, and boom, okay? So that's a bullish trend. In bullish trends, you will like to trade in bullish breakouts favorably, okay? So right here, this is a double top, boom. And you know what that means, guys. When you have double tops, like I mentioned in the beginning of the video here, I mentioned that double tops, you will see, put a neckline over here, from here, there, and there. And the price target will be measured like this, from here to maybe even the wick. But you can see here, this will be the price target around here. But you can see that the price target wasn't met because this is a bullish trend, and you can see right here it's completed half of the movement. Also, you can measure the move using a more conservative way, like this, using from the neckline from here to this, and then you put it like this, and boom, it's more close like that. But still, it didn't complete the target. Why? Because of the bullish trend. Bullish trends, bearish breakouts, you can usually expect a fake out or the price target not completing. That can happen. Remember, these are probabilities, okay? This is not a guarantee, okay? This is the ways how the market works, okay? So right there, price target was almost met. That will be a percentage gain of around here, 7%. So right there, guys, how can you anticipate this continuation to the upside? Well, we can see here that there's a pattern right here. You see, guys, almost every single time there's a pattern, okay? Almost every single time. There's no... It is very cool how it works there. And we'll delete that just a second there. And what do we see right here? This is a bullish pennant, okay? Bullish pennants are like this: support, resistance, resistance, support, support, and breakout. And that is also a W pattern at the same time, guys. Okay, there. I'm gonna delete this because I want to show you the W pattern. Okay, W patterns are, in other words, double bottoms. Here, double bottoms, here, here. You put the neckline right here, there, and then from here to the neckline, this will be the target. There, you can see here, this W pattern was met. That is a percentage gain of 10%, around 10%. And what is the price target for this bullish pennant? It will be measured from here to, no, wait, no. It's a bullish pennant, no, this is a, this is like a, almost a symmetrical triangle, but yeah, you can almost call it, yeah, it's like an asymmetric triangle, and the price target is measured like this, from here to here and there. Okay, and since this can be also be considered a bullish pennant, you can also put the price target from here to here, and then boom, like this. And you can see here from, I'm gonna put it there, here, the price target was met. Boom, beautiful. And it overextended. That can happen, like I mentioned, guys. That can happen. You can have a price target and then boom, it can keep going upwards. Okay, how can you determine if it's going to keep going upwards? You can look at lower time frames, but you will have to look for those patterns almost every single time an hour passes. And it's not worth it because these overextensions doesn't happen that much. So yeah, it can happen, but like I mentioned, guys, like I told you guys, here another bullish breakout like this, boom, downtrend, because it's too much of a parabolic run. Okay, too fast. This is too fast of a game. Okay, when that happens, expect a pullback. So from here to here, that's around a 40% gain. Oh my gosh. Beautiful. That's very beautiful, guys. Look at that. And beautiful. So, look at that, guys. Look at all of those trades we have for the moment. Like, look at that. Giant descending triangle. All these percentage trades. Like, wow. 26%, 21%, 14%, 14%, 14%, 32%, 27%, 10% around here, 40% there. Just, it's beautiful. It's beautiful. It shows you that this is evidence that Bitcoin price follows these patterns. And there's a lot of them. There's a lot of, but this video is already too long right now. It's not too long, but you know, it's already long. So I will show you the crashes that happen in the Bitcoin price. So here, this was a massive crash, but this was a C dump, a worldwide event that happened, and that's why it did that. So that no pattern can predict that, depending, but that would be an outside insider information to find out how can you know if in the time frame, but that's another story. So here guys, there's a lot of patterns. It's just that's how technical it is. It's a lot of patterns. So right here, so to start ending this video, because these are a lot of patterns, okay, these are a lot, okay. This can be, of course, literally, I'm just putting this video for free, literally. This is enough information to trade successfully, literally, if you understand what the things I'm saying and how to trade patterns, literally. So right here, how can you determine that this pullback? So first, there was a pattern forming right here, okay? There was, here was, what pattern was forming? This, guys, I'm gonna show you real quick. This happened around this year on May 19. You most likely remember that dump if you were by that date investing in Bitcoin. And there, okay, here is in head and shoulders, shoulder, head and shoulder, and as you can see right here, this head and shoulders was met from here, wait a sec, from here to here, and the price target is put out on the breaking way, and you can see right there, boom, it met the exact price target. Boom, beautiful. Okay, that's not manipulation, okay, that is a pattern, okay. No tweet, no Elon Musk, no, none of that caused that, okay? That was a pattern, okay? No tweet, no news event caused this. This was purely technical analysis that happened right there, okay? So here, that was a 34% pullback, okay? And this one, recently, how can you determine this massive pullback? Here guys, this is the pattern. So it was forming this falling wedge here. It was finding support resistance on the falling wedge, and the price target for that falling wedge was this. Boom, and breakout point from here. Look at that, from the support right there. I'll put it there so it can be set. And there, guys. And look at that. Boom. Price target met again. Okay? This wasn't any sickness. This wasn't any type of news event, okay? This was pure technical analysis, okay? Boom, 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 boom. Okay, that's the price target, and there you go. Okay, it's consistent. Almost never does the news affect the price as much in order to ignore technical analysis. Okay, that almost never happens. Okay, almost never, and almost never, literally, very, very rare. Okay. One of those cases was this one, okay? The March 11, 2020 incident. The C dump. This was caused by news events, okay? That was, okay? That one was. So right now, guys, that's how you can determine when a pullback is gonna most likely occur, okay? Here, if you see the pattern right here, and if it breaks out here, this is a price target. This will be the potential price target. Will it be a guarantee? No, it will not. But there's the patterns to show you what will be the price target if it were to complete the target. Here, also, this is a bullish pattern. Break up in a bearish way. The most likely scenario is for the falling wedge to break out in a bullish manner, but that's not a guarantee, and that's the thing about this technical analysis. Patterns are an indication to show you if it breaks out of this support, this will be the price target. If it breaks out of this resistance, this will be the price target, okay? That's an indication. It's not a guarantee that it's going to complete the target, even if it breaks out in a bullish manner. It doesn't guarantee it, but it will most likely complete it with a high probability, with consistency. Okay, that's why this is not guaranteed, and this is why most people don't make money trading, because one of many things are attributed to that. It can be because of the money management they do, because of smaller time frame patterns, and because they're not patient, because they don't first they don't know how to do technical analysis. That's a very good indication. Fundamentals most of the times doesn't affect the Bitcoin price in the short term, okay? Fundamentals can be considered good news also, because let's say that in order for the Bitcoin price to do a massive uptrend to the upside using only news, well, you can expect a type of news like, for example, Walmart buys, let's see, 1,000 Bitcoin. Something like that can move the price to the upside. That can trigger that type of event, okay? But usually, the patterns determine the way the next price movement it's gonna be executed. So that's how it works, guys. Okay, I already show you right there how it works, and it works. You can see it. Patterns. That's how technical analysis is. Patterns using price, past history, price action to determine future price action. That's how technical analysis work. You search for past movements in the price of the chart, and then you will try to determine the future using those past movements. Okay, but that's how it works, guys. So this is how you can avoid getting dumped on, by knowing these patterns and knowing technical analysis. Because right here, guys, if you have a position in the Bitcoin asset, so you can put a stop loss just in case it breaks down below the support line, and boom, and then you avoid most of that dump. That's how you avoid it. Okay, because that's how it works. That's how it works. And put a buy-in if it's going to break in a bullish way in the pattern, when it breaks out in a bullish manner. And if it breaks out in a bullish manner, how do you avoid a fake out? You put a stop loss below the support line, because if this support line, when it confirms a support, the bullish price action doesn't hold that support line, then you can have a stop loss, because it will most likely continue to the downside because of the fake out. Okay, and that's how trading works. Okay, and you do that consistently using big time frames like the daily time frames. There's also weekly time patterns. There's monthly patterns, but I usually use the day time frame. Okay, guys. So yeah, guys, that is today's Bitcoin technical analysis YouTube video. That's how you avoid getting dumped on in the Bitcoin price, and how to anticipate and avoid cryptocurrency crashes, because it's not good if you're in a position, especially in a leverage trading, and you get dumped on like that. It's not a good thing. Most people don't like that. So that's how you truly avoid Bitcoin dumps and cryptocurrency crashes. Okay, most of the times, like I said, it's not guaranteed, but that's how you do it most of the times. So yeah, guys, thank you so much for watching this YouTube video, guys. If you enjoyed this YouTube video, guys, leave a like on this YouTube video, comment on this YouTube video, and share this YouTube video with your friends. Also, if you haven't subscribed to my YouTube channel, Crypto Solutions, subscribe to my channel, Crypto Solutions, if you enjoy this video and if you want to keep receiving more content and educational content in the cryptocurrency market. Also, guys, you can support my YouTube channel by clicking in the Patreon link in the description below, where you can get an elite VIP crypto investor membership, where you can get an immediate short-term buy opportunities, immediate short-term selling opportunities, live weekly long-term cryptocurrency price updates, Bitcoin tops and Bitcoin bottoms with certainty in the short term and in the long term. Also live updates, my buying targets, my selling targets, and more. Thanks so much for watching this YouTube video, guys. Have a nice day, guys. Take care, guys, and peace out, guys.